Hello and welcome to this very special interaction where we are going to talk about what to expect in the budget specifically for infrastructure sector. I have three important guests with me who track the sector pretty closely. Sajay Kumar, partner and leader public policy at Deloitte India. Arindam Guha, partner Government and Public Services leader at Deloitte, and Dr. Niranjan Hiranandani, co-founder and managing director of Hiranandani Group of Companies. Thank you so much, gentlemen, for taking out time for us and our viewers. Let's first start with why is infrastructure important? Is better infrastructure spend needed to push the manufacturing space or Atmanirbhar Bharat that has been spoken about lots in the last 1 year? Sanjay, why don't you start?
Oh, thanks. Infrastructure has a unique thing that it boosts the investment in the capital market, in the capital assets, and it also creates job at all levels, low level as well as the semi-skilled levels. And the core sector boost is something which is so desired for developing the manufacturing sector, which will again give a lot of boost to the employment. And overall, if you see, the infrastructure also has a very important impact on the GDP, and RBI calculates it at 2 capex multiplier at 2.45 to the GDP. So infrastructure is definitely one of the asks that that most of us are rooting for to see in the budget, because it will help the country grow out of what we are today and bring back that 7 or 8% of the GDP growth that we are so dearly requiring for the country.
Right. Right. Anandam, let me come to you. As Sanjay even mentioned, can you just elaborate more on this? Will infrastructure translate into lower cost, better efficiency, which is needed for higher GDP growth, or investment to actually become more attractive, because of which the GDP growth actually improves?
Well, you see, as all of us know, one of the key focus areas for the country today is to attract investment, private investment. Now, whether they are from companies within the country or outside, we necessarily have to target investment. And all of us know that the large companies in the world, be they in India or in other countries, have to be competitive wherever they locate. So infrastructure is a necessity from that perspective as well, because if we are to bring down our logistics costs within the country and our utility costs to those in our competitor countries or competitor economies, then clearly there is a need for investing in infrastructure. This infrastructure can be in the form of roads, it can be in the form of ports, airports, logistics parks, it can be in the form of power generating capacity or transmission and distribution capacity. But all of this together will help whichever company decides to locate in India to be much more competitive in terms of their cost structure. So even from that perspective, infrastructure is paramount going forward.
Right. Arindam, when we just talk about the pointers that you were making, how important is interest cost, which is already lower? How important is the new policies like PLI, which have come, where even some investment is coming for manufacturing into select sectors? Are this a start towards the beginning of the eventual overall cost coming down, which you were just referring to?
We hope so, because I think clearly the PLI is a very, very path-breaking scheme, because, for the first time, I think we are linking incentives to the levels of production. So even from the perspective of the government, they are definitely giving incentives, but it is based on actual production. And of course, as all of us know, every part of incremental production actually goes in boosting the GDP. So I think the PLI is clearly a very, very innovative and path-breaking development, which is being welcomed not only by the private sector, but even from the government's perspective, it is based on tangible output. Now, if we were talking about interest costs, I think, of course, Atmanirbhar Bharat, as part of those initiatives, many measures have been brought about. But I think one of the areas which still need to be focused on is how much of the actual liquidity, which is there in the banking system today, is reaching small and medium enterprises. because I think there needs to be some more focused attention from that perspective, which needs to be given.
Right. Dr. Niranjan Hiranandani, can you just talk about the talk? There are a lot of talks about Infrastructure Development Finance Corporation coming in. You earlier have spoken about you need a specific, infrastructure financing body specifically for long term. Do you expect that to come in the budget? Is that the need of the hour which can actually boost investment where interest rates are already down?
Well, whether it comes in the budget or outside the budget is not important, but it is absolutely imperative. We always had infrastructure banks in the earlier days, whether it was IDFC, even ICICI, all these were infrastructure banks, long-term lending, borrowing long-term, lending long-term. All the banks today are short-term borrowing and lending long and medium, but they are not able to lend long because they are not geared for infrastructure projects. This is a huge mismatch. Unless you don't have a good new infrastructure bank, the private sector multiplier effect cannot take place. Of course, even the government sector cannot do the multiplier effect if they don't have actual debt availability into the market. So it is imperative to have funding which is going to be done. But funding be what it is, we do need both the sectors, private and government, to multiply the investments which are now taking place in the infrastructure sector. Yes, as Arindam just mentioned, there are various sectors where these investments are taking place, and all these factors have improved. For instance, Mr. Gadkari's road program is now 30 kilometers per day. Ports are taking up, other things are taking up, but not enough. We need much more. If you want to achieve what Sajay Kumar mentioned about it, in terms of getting a 7% GDP positive, or maybe even 10% GDP positive, if you want to achieve the target of the Prime Minister of $5 trillion economy, there's no alternative. You have to have further investments into the infrastructure sector. Private sector, public sector, banking segments, multiplier effect, all these become imperative in order to take the economy out of this morass which we are in today. There is no alternative. You can't continue with such a low degree of investments into the infrastructure sector and expect that the economy is going to come out of it. If you want employment to pick up also, and we to compete with the rest of the world, China is very far away. They're even having a growth today of a positive 4.5% GDP growth, even in this COVID time. So investments, banking funding, which we need, incentives further, PLI is one part of it, but we need to do and smoothen this kind of funding to a much bigger extent than what we are already doing. We have to do it. We have no alternative. Unless we don't do it, the country cannot progress to the extent which the Honorable Prime Minister has targeted, and I'm very happy that he has put that target. So automatically, I think infrastructure will have to be supported.
Right, Dr. Hiranandani, you made a very important point that long-term infrastructure financing has to be, be a part of it. But an also important part is the execution, apart from roads and some of the other sectors, has not been that great. Do you think there is a policy problem, or there is a problem of confidence that needs to be addressed?
I think execution has unfortunately not been our strong point. And roads have been an exception in the recent times, where Mr. Gadkari has really been able to take this forward and really sort out a large number of issues which were there, including litigations which were pending in that sector. But we need to do this across the board. Even today, when you say ease of doing business is there, actually on the ground, when you see many of the issues which are there in terms of getting the permission to get it, getting the environmental clearances, having to put down the people over there, getting the labor into the situation that we really want to do, all these factors are still a long way off. Today, for example, 42 companies left China in the textile sector. Only 2 have come to India. Out of the 42 that left, 23 went to Vietnam, 12 have gone to Bangladesh. So how do you expect, if you are not going to have adequate incentivization, as both our other panelists have spoken about, you need to create that incentive somehow or the other in order to draw these further people to come into India and continue to invest in a very big way. And then make it easy for the persons to actually execute on the ground right from the start in terms of conceptualization to execution to and all. And of course, taxation issues should not get complicated as they have in the past.
Right. Mr. Sanjay, let's take this point forward. How important are policies that are needed at this point of time for better execution or better creation of execution? What do you expect in terms of spending from government, which will of course be a enabler, and then policies which are needed to attract private as well as foreign investments?
So let me, both speakers have made a very good point. So let me take some of the points forward. Countries with a stronger governance achieve a stronger output impact out of the infrastructure investment. Now, the problem is that we have on one side road really galloping, but on the other side, we have other sectors which are not doing very well. So it is very important that if we have about 111 lakh crores to be for infrastructure development over the next 5 years' time, then obviously we need to have a very strong governance structure. Chile, Norway, and Korea, all the three countries and from the three continents that I just mentioned, have put in place a governance board which allowed them to take a holistic picture on the infrastructure governance and infrastructure management. There's another IMF report which talked about that 33% of the overall investment in the infrastructure sometimes gets frittered away. Now, if we put this together, the role of an infrastructure board to take care of the overall governance issues, make sure that the implementation is on the unilinear path. Mr. Hiranandani mentioned that implementation is not our best strength, but let us address that itself, because if that is not our strength, then it is important to address that squarely and look for opportunities to strengthen that. And I would strongly vote for something like this. Maybe it comes in the budget or subsequently. That is the choice of the government, but something like this is very much needed. The second thing, Arindam did talk about and also Mr. Hiranandani talked about the private sector investment. Today, close to about 22% of the overall investment comes from the private sector. The balance, 78%, comes from either the central government or the state government. It's very important that the private sector investment moves up so that it frees a little bit of the fiscal space for the government, which could undertake few more projects and make it better. Obviously, the times that we are in, we need to be far more bold. We need to change the paradigm that has presently been existing in the tax statute. Looking at that, some of the tax statute, the way we have, that income tax has gone along, is that each person is taxed separately. Why not look at from the point of view of group taxation, tax consolidation approach? Some of our neighboring countries in the Asia Pacific region have gone for that. It's time for us to also go for the group taxation, or what we call as also tax consolidation approach, where a particular promoter under this and has a multiple SPVs could think of setting off the losses if there is one in one SPV with the other SPV, and thereby have more money in the pocket so as to improve on the investment in the infrastructure. So one has to think of various other measures to bring about a faster development and investment in the infrastructure.
Right. Let's take this point forward, Mr. Arindam. Mr. Hiranandani spoke about long-term financing. Sanjay also just spoke about innovative methods. What is your belief on this? You think infrastructure funding or loan for infrastructure for really long-term is unavailable, and that is one of the key reasons why corporates are also shying away?
Clearly, because if we look at Mr. Hiranandani mentioned about an infrastructure bank, I think let me just use a slightly different term for that. I think what we are really looking at is a development finance institution. He clearly mentioned the likes of ICICI, which we used to have earlier, many years back, which had the provision of being backed by government. The core capital was funded by government, which was then leveraged by that institution to borrow money or to even gather resources from the development agencies like the World Bank and the Asian Development Bank. It could also use that initial capital to try and borrow in the international capital markets. It would then be backed by a liability profile, which would be much more longer term than what we have in terms of the banks and NBFCs. So naturally, with the government backing, they would be able to fund the initial phases of any infrastructure project, which is strategic to the country, with long tenure funds and even funds which are more cost effective than what we have today. So the need for a development finance institution is clearly there. Similarly, you see, within our country, we have a huge corpus of pension and insurance funds, which is already there. And I think we were talking about 111 lakh crores in the form of the national infrastructure pipeline. Maybe around 45 to 50% of that is already available as assets under management in terms of domestic pension funds and insurance companies. One of the hindrances which these companies face when investing in infrastructure projects is the problem of having an acceptable credit rating for the financial instruments which are floated by infrastructure SPVs. Because there are some basic guidelines which they have to follow. Most infrastructure projects, at least in the initial stages, do not meet the threshold credit rating guidelines. One way to address that, and I think the government has given thought to that, is to expand the credit guarantee facilities which are there for infrastructure projects in the country today. I think there was some discussion about a credit guarantee enhancement corporation. We probably need to actually expand the credit guarantee limits which are there in the country with some amount of initial government funding, which can then be leveraged to get funding from other development agencies. Because all these measures would help in bringing in extra budgetary resources, whether they are from private sector investors or even from other banks and financial institutions, which would be more long-term for funding infrastructure projects.
In Mumbai, you have seen a lot of urban development happening in. So apart from budget, also different states do need to pick up their execution, their ordering activity. It has to be a continuous process after, probably budget sets a guideline for spending more on infrastructure.
Absolutely. You see, because if you look at the national infrastructure pipeline, 30% of, again, I'm coming back to the same number, 111 lakh crores worth of projects, 30% of those projects are in sectors like urban infrastructure, irrigation, health, education. And when I say urban infrastructure, it covers urban mobility. I think Mr. Hiranandani was mentioning about the metro projects which are ongoing in various parts of the country. They are covered there. Now, you see, the crux of the issue is at the central government level, let's say in the Ministry of Railways, bulk of the projects are going to be promoted and funded by the Government of India. But in these sectors which I just now talked about, be it urban, be it health, education, irrigation, the projects are the primary responsibility of the state governments. As all of us know, the fiscal challenges at the state government level are much higher. And naturally, those issues also need to be addressed somewhat through the forthcoming budget and there could be various options for that. We were talking about a development finance institution or an infrastructure bank. There has to be a regional perspective there. If we recollect, many years back when ICICI was there, it used to have region-specific subsidiaries or group companies where state governments could also participate as stakeholders. So, naturally, we will have to explore a regional construct like that. Secondly, the other issue which needs to be addressed very, very clearly is the issue of monetizing land. Many of the state governments, and quite a few of them, we have come across many during the engagements with government which we have or the projects which we do, have parcels of government land which may not be under any single department. There needs to be a framework put together where such parcels can be transferred to one single entity in the state government, and more importantly, can be monetized for commercial or infrastructure projects. I think that is another need of the hour. And the third area where I think it would definitely help the state governments is the issue of asset monetization. We were talking about infrastructure investment trusts, where existing or operating infrastructure assets could be transferred to these investment trusts, and the proceeds could be used by the original promoters to invest afresh. Even at the state government level, for urban projects, let's say, we need to have these kind of infrastructure investment trusts for monetizing existing urban infrastructure projects which are already in the operating phase. I think these are the three areas which come to my mind, which can definitely ease the burden on the state governments when it comes to promoting and funding infra projects.
Right. Just a last question, Mr. Sanjay. Just to wrap it up, National Infrastructure Pipeline has been announced. A lot was spoken about it even during the independence speech. What needs to now be done to focus on that execution? Of course, we've spoken about funding, land issues, various other things. But do you expect a mention of that in the budget with some focus towards execution?
Well, Mr. Poddar, I did mention about a governance model, and creating a kind of a board or something like that, which can allow a little bit synergistic way to spend on the infrastructure and also improve the implementation, which Mr. Hiranandani did point out. So it's very important from the government, be it in the budget or later on, to create something like that and then start looking at a very holistic picture of how to implement the infrastructure development in a very, very certain manner. There cannot be, of course, the land is many times does create its own problem, but there are other problems too. The financing part or some other aspects, or the developer may have run short of money. So you need to address all these things and move across on this far more with celerity, with a kind of rapidness that the infrastructure required. I mean, look at China or some other countries. I mean, the entire development, if one sees it, one could point out is the infrastructure. And many times that even at the time of when the rest of the world was reeling under the pandemic, China could build on its whatever the strong points that it had, based on a better infrastructure, and could ramp it up very quickly when things became slightly better. Today, with the exports happening at double click, at some of the other things, China is looking at almost like 4.5% of the GDP growth in a pandemic year. So we have to also start investing in the infrastructure in a very, very certain manner and make sure that it moves well. Government has done some work. It's not that they have not done. It has been on their mind, and many of the projects and the sectors have been the beneficiary, and we do see that in our day-to-day life, but it needs to do more. And this is what most of the panelists would agree with me in saying so, that it needs to do more.
Right. Thank you so much, gentlemen, for taking out time for us. We would like to touch base with you once again after the budget is presented and what were the key takeaways for this sector. Thank you so much.
Thank you. Bye-bye.